America loves a good gamble, scratch-off tickets, roulette wheels, that weird uncle who bets on snail races. We can't get enough. Gambling is woven into the fabric of our culture, from the bright lights of Las Vegas to the small-town bingo halls. It's not just about the thrill of winning, it's about the hope, the dream, the possibility that the next big break is just around the corner. But what if the biggest gamble was happening right under our noses, with the future of the US economy hanging in the balance? Imagine a scenario where the stakes are higher than ever, where the outcome could affect millions of lives. This isn't just a game, it's a high-stakes drama playing out in real time. Buckle up, folks, because today we're diving into the wild world of cryptocurrency to see if it can save Uncle Sam from drowning in a sea of red ink. Cryptocurrencies like Bitcoin and Ethereum have been making headlines for their volatile price swings and potential to revolutionize the financial system. But can they really be the lifeline that the US economy needs? Could digital dollars be the answer to our national debt woes? The idea of a digital currency isn't just a futuristic fantasy, it's a real possibility that central banks around the world are exploring. A digital dollar could streamline transactions, reduce costs, and even help combat financial crimes. But it's not without its challenges and risks. Can Bitcoin really bail out the country? Bitcoin, the original cryptocurrency, has been hailed as digital gold, a store of value that could potentially replace traditional currencies. However, its extreme volatility and lack of regulation make it a risky bet. Some experts believe it could stabilize over time, while others warn it could lead to financial chaos. Or is this just another case of wishful thinking in the face of a terrifyingly large number with too many zeros? The national debt is a complex issue with no easy solutions. While cryptocurrencies offer some intriguing possibilities, they are not a magic bullet. The road to financial stability will require careful planning, innovative thinking, and perhaps a bit of luck. Let's break it down, shall we? We'll explore the potential benefits and pitfalls of adopting digital currencies, examine real-world examples, and hear from experts on both sides of the debate. By the end of this journey, you'll have a clearer understanding of whether cryptocurrencies are a long shot or the winning ticket for America's financial future. First things first, let's talk crypto. Cryptocurrency, often just called crypto, is a type of digital or virtual currency that uses cryptography for security. Unlike traditional currencies issued by governments, cryptocurrencies operate on technology called blockchain, which is a decentralized technology spread across many computers that manage and record transactions. Imagine regular money, but instead of crisp bills with dead presidents, it exists only in the digital world. This digital form of money can be used to buy goods and services, but it uses an online ledger with strong cryptography to ensure secure online transactions. Think of it like the points you collect on your supermarket loyalty card, but instead of getting a free loaf of bread, you could theoretically buy a house. These points, or tokens, can be traded or used in various ways, much like traditional money, or a car. The idea is that these digital tokens have real-world value and can be exchanged for tangible items, or maybe even a small island. The possibilities are vast and the value of these digital currencies can be significant. That's the basic idea behind cryptocurrency. It's a new form of money that exists only in the digital realm, and it's gaining popularity for its potential to revolutionize the financial world. It's decentralized, meaning no single government or bank controls it. This decentralization is one of the key features that attract people to cryptocurrencies. It offers a level of freedom and autonomy that traditional currencies can't match. It uses fancy cryptography to keep things secure, hence the name. This cryptography ensures that transactions are secure and that the creation of new units of cryptocurrency is controlled. And its value can fluctuate like a roller coaster on Red Bull. So, yeah, it's complicated. The value of cryptocurrencies can change rapidly, making them both exciting and risky investments. But stick with us, because this roller coaster might just take us all the way to fiscal freedom. The potential for high returns is there, but it's important to understand the risks and do your research before diving in. Now, let's talk about the elephant in the room, the national debt. It's a big one, like really big. The national debt is a topic that often gets swept under the rug, but it's crucial to understand its implications. This debt isn't just a number. It's a reflection of the country's financial health and its ability to manage its finances responsibly. Imagine a stack of dollar bills so high it could reach the moon, and back, and then to the moon again. This visualization helps put into perspective just how enormous the national debt is. It's not just an abstract concept, it's a tangible amount of money that has real-world consequences. That's roughly how much money the US owes. The US Treasury is responsible for managing this debt, and it's a delicate balancing act. They have to ensure that the government can continue to operate while also finding ways to pay down this massive amount of money. Every year the government spends more than it takes in through taxes. This overspending is a significant factor contributing to the growing national debt. It's like running a household where the expenses consistently exceed the income, leading to a reliance on credit to make ends meet. That difference is added to the debt. Each year the gap between revenue and expenditure widens, and the debt continues to grow. This cycle of borrowing and spending creates a financial burden that future generations will have to bear. It's like putting all your purchases on a credit card and only making the minimum payment. Eventually, it catches up with you. The interest accumulates and the debt becomes harder to manage. This analogy highlights the unsustainable nature of the current fiscal policies. And let's just say, Uncle Sam's credit limit is looking a little scary these days. The national debt is not just a number on a balance sheet, it's a pressing issue that requires immediate attention and action. If left unchecked, it could lead to severe economic consequences, affecting everything from interest rates to the country's ability to fund essential services.
Breaking news.
So, where does cryptocurrency fit into all of this? Well, some folks believe that embracing digital currency could be a way to chip away at that mountain of debt. How, you ask? Let's explore some possibilities. First off, crypto transactions can be faster and cheaper than traditional banking systems. No more waiting for checks to clear or paying hefty bank fees. This could streamline government operations and save taxpayers money. Secondly, some cryptocurrencies like Bitcoin have a fixed supply. This means they're immune to inflation, unlike our good friend the US dollar, which seems to be worth less every time you go to the grocery store. A blockchain bonanza? Potential benefits of a crypto-powered treasury. But wait, there's more. Remember that fancy cryptography we mentioned earlier? It's not just for show. It also makes cryptocurrency incredibly secure and transparent. Every transaction is recorded on a public ledger called a blockchain, which is like a digital receipt that can't be forged or tampered with. This could be a game changer for government accountability. Imagine a world where you could track every penny of your tax dollars and see exactly where it's going. No more shady backroom deals or mysterious budget allocations. Transparency for the win. Crypto concerns. Navigating the risks of digital debt solutions. Okay, before we all get carried away with dreams of a crypto-powered utopia, let's talk about the potential downsides. Because, as with any good gamble, there are always risks involved. Cryptocurrency is still a relatively new and untested technology. Its value can fluctuate wildly, making it a risky investment. Remember that roller coaster we talked about? Yeah, sometimes it goes off the rails. Plus, the decentralized nature of crypto, while appealing in theory, also makes it difficult to regulate. And we all know how much governments love their regulations. Beyond Bitcoin, exploring the future of finance. So can cryptocurrency really save the United States from its national debt? The short answer is, maybe. It's a long shot for sure, but not entirely outside the realm of possibility. The truth is, the future of finance is uncertain. Cryptocurrency is just one piece of a much larger puzzle. What's important is that we start having these conversations. We need to explore all options, think outside the box, and maybe, just maybe, embrace a little bit of risk if it means securing a brighter financial future for generations to come. Join the crypto conversation. Your opinion matters. So, what do you think? Is cryptocurrency the answer to our national debt woes, or a recipe for disaster? Don't forget to like and subscribe to Express Econ Geofinance Insights, and leave your comments below.